Welcome back, traders. Today we begin part 2 of our 4-video series on the 50 most powerful psychology lessons from Mark Douglas. In the first part, we explored the foundations of uncertainty, probability, and emotional neutrality. Now, we move deeper into the principles that shape consistent execution. If you have ever struggled to follow your plan, hesitated on valid setups, or acted impulsively after a loss, these lessons will help you understand why discipline is the real core of professional trading. Douglas teaches that consistency is not built through information, it's built through behavior. The trader you become is defined not by what you know, but by what you do when it is time to execute. In this second part, we explore the mental structures that support discipline, the emotional traps that weaken it, and the habits that allow you to act with clarity, no matter what the market is doing. So, if this type of content is valuable to you, remember to like the video, subscribe to the channel, and enable notifications so you don't miss the upcoming lessons. And feel free to share in the comments which topics you would like us to explore in future videos. You will also find links to our trusted partners in the description below. Using those links helps support the channel and allows us to continue producing this kind of educational content. Now we move into the principles and core beliefs Mark Douglas taught, ideas that shape the mindset of consistently successful traders. Lesson 14. Discipline beats intelligence. A common trap is believing that intelligence leads to trading success, as if knowing more or analyzing more were enough. But Douglas highlights a fundamental truth. The market does not reward the smartest traders. It rewards the most disciplined. You can understand every concept, study every system, and track every chart. But if your actions do not follow your rules, the knowledge becomes worthless. Discipline is what transforms understanding into consistent execution. Discipline is about acting according to your plan, not according to your feelings. It's the ability to follow through even when every part of your mind is screaming to do the opposite. This is the core of professional execution. It's what allows a trader to stay calm when the market becomes chaotic and to remain steady when emotions begin to rise. Discipline is not about intensity or motivation. It's about repetition. It's the decision to behave consistently, regardless of what the last trade looked like or how uncertain you feel in the moment. Lesson 15. Build structure, then submit to it. One of Mark Douglas's core teachings is that structure creates freedom. When you build a system with clear rules for entries, exits, and risk, you remove the need for emotional decision-making. But the key is not the plan itself. The key is submitting to it. It is not enough to create rules. You must trust them even when they feel uncomfortable. Even when the last 3 trades were losses. Even when your instincts whisper that skipping a stop loss just this once would be fine. Discipline means executing like a machine when your human mind wants control. Lesson 16. The market tempts you to break rules. The market functions like a never-ending casino. It flashes signals, triggers sudden reversals, and presents tempting patterns. Every minute offers an opportunity to doubt your plan, rush into a trade, skip confirmation, or chase price. Douglas explains that this is not a flaw in the system. It is the nature of the game. Discipline is not only about avoiding big losses, it's about resisting the market's constant seduction to act impulsively. Every time you break a rule, you weaken your confidence. Every time you follow your plan, you strengthen it. Lesson 17. One trade means nothing. A common emotional trap is placing too much importance on a single trade. If it goes well, we feel unstoppable. If it goes poorly, you question everything. But Douglas teaches that one trade means nothing. The outcome of a single position is random. Your edge only appears over dozens or hundreds of trades. Discipline helps you zoom out and stay objective. It allows you to treat every trade equally, whether it's your first or your 50th. Professional results come from consistent behavior, not from the emotional weight placed on isolated outcomes. Lesson 18. Remove the gray area. Many traders fail because their trading plans leave too much room for interpretation. They say things like, "I'll see how the market feels," or "I might take profit early if it looks weak," Or I'll widen my stop if the candle wicks a little. This gray area is where discipline dies. Douglas teaches that ambiguity creates inconsistency. A well-structured plan eliminates interpretation. It tells you exactly when to enter, where to place a stop, when to exit, and, most importantly, when not to trade. The less you leave to chance, the easier discipline becomes. Lesson 19. Track behavior, not just results. Many traders only look at their P&L, but Douglas reminds us that profit is a lagging indicator. Behavior is the leading one. Instead of asking how much you made, ask whether you followed your plan, respected your stop loss, and traded from logic rather than emotion. A behavioral journal helps reveal patterns in your execution. Over time, this journal becomes a mirror that reflects whether you are becoming more disciplined or drifting into inconsistency. This awareness is crucial for long-term growth and stability in decision-making. Lesson 20. Discipline is a daily practice. Douglas emphasizes that discipline is not a switch you flip. It is a muscle you train. You do not become disciplined once and remain that way forever. You practice discipline one trade at a time, day after day. It grows stronger with repetition. Start small. Commit to taking only trades that meet your criteria. Commit to never moving your stop. Commit to recording every trade you take. You do not need perfection. You need consistency. That is how discipline becomes a habit instead of an effort. Over time, it becomes automatic. Lesson 21. Discipline protects you from emotional swings. The real power of discipline is not just consistency, it is emotional freedom. When you trade with rules, you eliminate the drama. You stop chasing emotional highs and stop panicking during dips. Douglas explains that disciplined traders experience less stress, not more. They feel calmer because they already decided what to do before the trade even began. The market becomes far less threatening when you know that you control your actions no matter what happens. Discipline turns your strategy into a functioning machine instead of a theory. Choosing discipline is what separates professionals from emotional traders. Success is not created in the setup or in the analysis. It is created in the moment of execution, when you decide whether to follow your rules or follow your feelings. The next time you're tempted to deviate, ask yourself a simple question. Do I want to feel good now or win long term? The choice defines the trader you become. Lesson 22. Fully accept the risk before you enter. Risk carries emotion. Before placing a trade, ask yourself if you're genuinely comfortable losing the amount you're risking. If the answer is not a confident yes, you are trading with emotional resistance. Douglas teaches that until you accept the risk, you are not truly free to trade. When you hope not to lose, you remain attached to the outcome, creating tension and anxiety. But when you define the risk clearly and mentally accept the possible loss, you remove emotional pressure. Now, your focus shifts from protection to execution. Lesson 23. Losses are business expenses, not failures. Most traders treat losses as personal rejection. They feel frustrated, ashamed, or angry. Douglas reframes this completely. Losses are business expenses, nothing more. A restaurant owner buys food inventory. If some food spoils, it is not a failure. It is the cost of doing business. Trading is the same. Your job is to take trades with an edge. Some will work and some will not. Losing is not failing. It's part of the math. When you internalize this, losses become emotionally neutral, allowing you to stay objective and focused. Lesson 24. Release emotional attachment to money. Douglas explains that many traders lose because they care too much about the money. They view each trade not as a probability, but as a paycheck. When money equals identity, every tick against you feels like a personal attack. But the truth is simple. Money is not your worth. It is only the score. The market does not care what the money means to you. It rewards consistency and execution. If you are emotionally attached to the money, you will hesitate on valid setups, exit winners too early, or hold losers too long. Detachment brings clarity. Lesson 25. Risk only what you can emotionally afford to lose. Emotional tolerance matters as much as account size. Douglas offers a powerful test. Can you lose this amount and still take the next trade without hesitation? If not, you're risking too much. Traders often rely on percentages or formulas, but emotional capacity is equally important. It is better to risk less and execute consistently than to risk too much and destroy your discipline under pressure. Lowering position size does not make you weak. It makes you wise. Lesson 26. Avoid the all-in mentality. Have you ever thought that if a single trade worked, you would recover all your losses? Or that doubling your position would fix everything you lost yesterday? This is the trap Douglas warns about. Risking too much because you want too much. This mindset transforms trading into gambling, and it is driven by emotion rather than strategy. Professional traders never go all in. They act with precision, with a plan, and with predefined risk. The moment you start trading to get back at the market, you lose the clarity needed to follow your edge. And with these lessons, we close part 2 of this 4-video series on Mark Douglas and the psychology behind consistent trading. These ideas deepen the foundation by showing how discipline shapes execution, protects your mindset, and brings stability to your decision-making. In the next videos, we will continue exploring the principles that refine your behavior, strengthen your emotional control, and help you trade with the confidence and consistency of a true professional. So, trader, if this video helped you gain more clarity, make sure to like the video, subscribe to the channel, and turn on notifications so you do not miss the next lessons. And let me know in the comments which topics you would like us to explore in future videos. If you want to go deeper with exclusive content, early access to videos, and additional tools to support your development, consider joining the ComLucro trader community right here on YouTube. It's a simple way to support the channel and a smart investment in your growth as a trader. You will also find links to our trusted partners in the description below. Using those links helps support the channel and allows us to keep producing this kind of educational content. Please also remember that the mission of the ComLucro channel is simple. We help traders build clarity, confidence, and structure, so every decision is made with discipline and intention. Here you will find complete courses designed as a true trading masterclass. We teach liquidity, market structure, higher time frame analysis, and supply and demand, always focused on understanding price and executing with a professional mindset. We also cover trading psychology, risk management, and long-term consistency, because trading is not just about charts. It is about mindset, discipline, and execution over time. Our main courses include Smart Money Concepts, ICT, Technical Analysis, Trading Psychology, and Wyckoff. Alongside that, we share insights from respected traders whose work helps you better understand how markets really behave. Thanks for watching, and I will see you in the next video.